Another day has passed and more inflation has come through. We are looking at these numbers that provided by the government. We don't know what to believe, but regardless, we can feel it every time we go to the store. We see how prices have risen, and now it is starting to reflect in the statistics that have continuously shown to not be what it was originally, just a temporary or transitory event. Let's be honest, it never was going to be. And now at this time, the Federal Reserve is not only considering the possibility of increasing rates in March, but there might be a surprise hike as of the time you're watching this video. So let's get into that. I will talk about, of course, the inflation sensation first. And then, number two, we are going to talk about China's pivot. They're making a big change. I will cover all of that and more. Let's begin. So while everybody's talking about the possibility for a March rate hike of the Federal Reserve, which, by the way, they are way behind the curve if we're using their statistics, some are starting to say that actually there's going to be an emergency hike, even while they are still doing their quantitative easing, even while they're printing up money, even while they had suggested just a little while ago. Think about how recently it was that, no, everything's okay. We don't need to worry about this until 2024. Oh my goodness, now we need to do an emergency rate hike. I think the probability is low, but regardless, we need to talk about it. Fed's Bullard backs supersized hike seeks full point by July 1st. Can that actually happen? I think that would be incredibly hawkish, as they like to say. Inflationary shock needs big response, he said. St. Louis Fed chief defers to Powell on the size of a March increase. So, of course, they don't know. Nobody knows what's going to happen until it does. Any sort of talk beforehand is all just talk until it is a done deal. So you're looking at right here, the hottest inflation since 1982. How does the Federal Reserve counteract that? Higher interest rates. What would higher interest rates do? Well, initially, not much. I mean, if you increase it by 25 basis points, by 0.25%, not a big deal. If you increase it by, a month later, you come around 25 basis points. Okay, no problem. But as soon as we start getting towards that 1.0, then we're going to be in a world of hurt. Why? Why do I say this? I think it is very clear that you look historically where we have been so many times before. You get these cycles that repeat over and over again, 1980, and then you go through it, and every time they cannot get back to where they were before. This time around, 0.75, maybe 1.0, maybe even a little bit more, 1.25, before they have to say, whoa, okay, things are real slowing down. I got to stop this. I got to do this right now, or else we're going to have a recession, and then they can reverse. But at this time, even though many have said there is not going to be a rate hike, well, they also said that there wasn't going to be a QT, or the quantitative tightening, but they went in that direction anyway. And that's where we are at today. So Bullard is getting real hawkish. Like I said, it doesn't necessarily matter until they actually go through with anything, but it is important to see what they have said. It's not just Bullard. Every single one of those has favored, all the presidents and the chair and everybody. They've all basically favored rate hike for March. So we know that that is very likely. The probabilities of that situation are very high. Unless something changes. Stock market's off its high, but why? Because it's starting to price that in, starting to say, well, you know what, maybe that easy money is going to go away. Maybe we're not going to be able to entertain all this nonsense that we had seen where you could throw anything at it, SPAC this, SPAC that, and it suddenly raises $1 trillion. Hey, why not? Higher inflation is probably costing you $250 a month. That hits hard. Who is feeling the price squeeze the most? Millennials. Latinos in the middle class are at the top of the list. I don't know about all the details there. All I know is that everybody I'm hearing from are saying the prices have increased. Prices of car, prices of food, prices of energy, and so on. The prices are up. We know that to be the case. I don't need to tell you. US inflation is the highest in 40 years. When the important part of this is not the 40 years, it's the no let up in sight. Because 2020, they were saying, hey, don't worry about it. It's all good. It's just a few months. That wasn't happening. Some people were saying that because now month after month after month of elevated expectations, and then you get the print that comes out of, whoa, it was even higher than we expected, that this time around, it would be underneath. But that didn't happen, not at all. In fact, it was even more than the expectation yet again. That probably can't continue forever. At some point, that has to let up. But when is that going to be? I don't know. There's a lot of people talking about deflation. Are you there, deflation? I can't find you. I mean, seriously, there are some people out there who talk about deflation, and absolutely, we could face deflation. I have never denied that. But right now, where is it? Where is it? Please let me know. And right now, regardless, inflation, hyperinflation, deflation, the average person is going to get hit by it hard. So we got to be prepared regardless. And there are things that we can do. I have an entire playlist called How to End Solutions. Definitely check that out on my channel. Inflation surges 7.5% on an annual basis, even more than expected, highest since 1982. Core inflation, the nonsense inflation, 6%. Even it doesn't include anything. There's nothing in it. It's a core inflation. What is it? Nothing. It's hilarious. It really is hilarious when you see what it makes up. Well, we can't include that. That's volatile. Yeah, sure. Okay. Now this was big. So by the way, if you looked at what happened in the stock market, I think I have it up here. If I go in, let's look at this is the Dow Jones. If I break this down into, I don't know, let's look at this on a 1 hour maybe, if we can get that. Let me look really quickly. Okay, everybody look. So this is the day. So you can see when there was this big drop here, 12. That's an hour chart, but anyway, yeah. So it was about 12:45 or so when Bullard came out. That was the big drop because it was down and then it started to get a little wonky. That right there, when Bullard started to speak, market came down. What else happened here? Well, of course, in the morning we get this 10-year Treasury yield topping 2% for the first time since 2019 after hot inflation. People are watching that 2% mark. Yes, it is, just symbolic in a sense of 2%, or, you get round numbers and people start looking at that, whether it's for inflation numbers, whether it's for certain prices of index and so on. It is important. It is. And what they say here in this article is that the Fed will have to bring an even bigger fire hose. Until then, many economists are calling for the Fed to step in. The central bank has signaled they will stop adding assets to the portfolio in March, then rising interest rates. And quote, as the inflation fire burns even hotter, the Fed will have to bring an even bigger fire hose to put it out. Inflation is not going away. It's not just consumer goods going up. Don't bother waiting for any issues to resolve themselves and allowing workers to return to their jobs to lessen those supply bottlenecks. Inflation is raging out of control because of, apparently, strong consumer demand. Well, they go on here. Point here is that if we want to resolve this, the solution that the central bank can provide, if you want to call it a solution, is to increase interest rates. Now, I would think that higher interest rates are good. Okay, many people would disagree with that. But look, you as an individual, if you are taking excessive risk, then higher interest rates, they're bad. If you are the type of person who is, hey, if I put my money in the bank and I could get, let's just make up a number, 10%, interest rate, maybe then people will do that. But what do they do when they save it up? They just save it forever and ever? Some people do. But what if you could save it up and then buy something? Oh, wait a second. A totally different than what we see today. It's like, you don't have any money? No worries. You can still buy that. Just pay it off over, 72 payments. That's behavior that over a long period of time ends badly. Okay, I'm going on long. I know that. Let's just move through it really quick. Okay, stick with me. The Fed is close to risking a recession to fight inflation. And we see that when they do this, unequivocally, you go back in history, when the Fed gets to a certain point, they have to stop and they have to reverse. It doesn't happen after the first rate hike, okay? Very important. Lumber surges anew as supplies shrink. Yeah, we get that a lot. And now it's over 1,200 again. So it went from, let's say, historically normal range to 1,700, all the way down to 450. And there were some people saying it's deflation. Look, it's deflation. Look, I told you. And now it is over 1,200. Cooking oil surge is a sign for food inflation that can go even higher. This will hurt a lot of people for sure. And, you don't have to necessarily use cooking oil, obviously, but it just shows you what's underlying all of these other things that we've had. You could see a repeating pattern. This is the 30-year mortgage rate going back from 2013 when we had the taper tantrum, increasing again. 30-year mortgage rate, according to this, just showing us approximately 4% right now. So it is much, much higher than where it was. Look at that. Basically the beginning of 2021, not long ago. Bank of Japan, in a hilarious acts to put a lid on the bond yields and affirm the dovish stance. Have they ever? Can you be, if you were physically, if there's a dove and you see that dove, it's like, that dove is really dovish. I mean, does that make sense to you? I mean, there's no more dovishness you can get. Japan, the symbol of Japan should be replaced with a dove, or at least the Bank of Japan. Then we got this, all right? Take a look. Last time inflation was this high, this was the music everyone was listening to. So I'm going to leave this list here. If you people remember these songs, think of that time frame. I really thought it was cool because it makes you think, if you were around during 1982 and you were listening to this music, what else was happening during that time? Please, if anybody was and you remember it vividly, post it in the comments below. It'd be an interesting thing to hear. Let's cover this really quickly. I want to look at what's been happening in China right now. Take a look at how different it is from the rest of the world. Cheers. Didn't have enough time. China, total social financing, the amount of money that's being put out there right now, loaned out into the system, is the exact opposite, basically, of the rest of the world. China is, in fact, there's a record. This chart goes back to 2010. And slowly but surely, of course, as the economy grows and things, it needs to get bigger. But this is a huge surge. And they're going in the exact opposite direction. You can also see the M2 money supply in China year over year increasing significantly. So they are going complete opposite. I mean, I'm going to be looking back. This channel is basically just a documentation of what's going on. And this right now is huge. I don't think people get that. I haven't seen people making that connection for the most part, okay? And to leave it off with this, there's market anxiety. Because if you look at what I just showed you a moment ago, I mean, here's the broad markets. There was this kind of bounce. Hey, I don't have words for it anyway. It doesn't matter. The market sort of bounced up and it said, hey, look at everything's fantastic. And all it took was this one little thing to take place. And suddenly, the market has anxiety again. Look, this is all important for us to understand. Day-to-day fluctuations will be there, but you, the individual, have to be prepared for yourself, for your family. Do the things that matter most now. What can you do now? There are things that you can do, actions that you can take today. You want to know more things? I got the how-to and solutions is there for you. If you're young, I've put out these many ideas before. If you're not young, you got skills, you can do things with your hands. There are things for you. Post them in the comments. You want to know? You want those suggestions? You're in a terrible situation? Post it in the comments. Let me know. I read the comments. I reply to you. 10 years running. If you appreciate the information, hit that thumbs up. Thank you very much. And I'll see you on the next one. If you haven't seen this yet, you definitely want to check it out. All right, click it and I'll see you there.